What if today's breakout stock could be the one that rockets 5 times higher over the next year? Stick around, because missing this setup today could cost you thousands tomorrow. Just imagine waking up to a plunge on the Dow Jones, the S&P hurtling toward its worst week of 2025, and the Nasdaq slipping into correction territory. In this video, revealing why factor-based funds are being forced to unwind their largest tech positions and how you can turn that chaos into opportunity, then uncovers 3 under-the-radar small-cap AI stocks with massive upside potential, and we share the exact buy and sell zones for PLTR. Over the last month, Palantir has traced out a textbook rising channel. Each dip into the $70, $120 area attracts buyers defending that floor. The first step in our analysis is to establish a clear, objective fair value framework. We define a valuation corridor between $4.78 and $16.53 using conservative cash flow assumptions. If the stock ever falls below $4.78, it signals an ultra value opportunity with maximum margin of safety. Anywhere within that range still represents fundamental undervaluation and warrants serious consideration. Only when the price moves above $16.53 do we step back. To put this in context, consider the example of Biogen. Its fair value corridor ranges from $176 up to $208, and with current trading near $80, it sits over 50% below even the most conservative DCF boundary. Turning back to Palantir, the same methodology delivers a fair value gap between $4.78 and $16.53. Yet today, PLTR commands roughly $124.28 per share, trading more than 650% above our top DCF input.
Clearly, momentum and technical forces have overwhelmed fundamental anchors. On the chart, Palantir has spent the past year within a downward sloping channel. Price repeatedly finds support near $70 at the lower trend line, and then runs into resistance around $125 at the upper boundary. If price recovers into the middle of the channel, roughly $95 or $100, we lock in partial gains. And if Palantir rallies up to the ceiling at about $125, that is where we fully exit. Beyond $140, price exceeds both technical resistance and any reasonable valuation, so we stand aside. By blending our DCF-driven fair value, we create a seamless, rules-based roadmap. Buy near $70, take partial profits in the $95 or $100 range, exit at $125 and avoid new longs above $140. This analysis is proudly brought to you by imam.com, your go-to source for deep dive research reports and actionable screens. Hit subscribe so you never miss an update.